What's been happening in the market? And more importantly, what does that mean for you? Welcome to LVZ Market Minutes, the quick and refined update designed for savvy investors who value clarity over clamor. Our team breaks down the trends, movers, and the headlines that matter so you can stay informed and cut through the noise. Let's dive in. Past performance does not determine future results. Securities offered through Harbor Investments, Inc., member FINRA SIPC. Investment advisory services offered through LVZ Inc. LVZ Inc. is a federally registered investment advisor.
Last month was the March market roller coaster, but every roller coaster enthusiast knows that it's only a matter of time until they build a bigger roller coaster. I'm so excited to have a roller coaster enthusiast join us today, Nate Baumann, partner, portfolio counselor, and financial planner here at LVZ, joining us for the conversation. They measure every roller coaster by all of its metrics. Do you know the biggest coaster in the U.S.?
I'm always ready for the next big roller coaster. Although last summer we did do roller coasters, and I realized I might be getting too old for that. So I might just watch the market roller coasters from here on out and leave the real ones to somebody else.
The biggest roller coaster in the U.S. is in New Jersey. Any guess on how big the biggest drop is?
I don't even have a basis to guess. So 200 feet.
I wouldn't even dare guess myself.
It's 456 feet for the drop with a top speed of 128 miles per hour. Is that what April felt like for you?
Yeah, pretty much.
April had its shares of ups and downs, so this will be a fun recap. Joey, tell us what went on a week-by-week basis for the month of April.
I would say the thrills of April came in the first week. On the second, after the market closed, Trump came out and announced his reciprocal tariffs on over 90 countries, which were so big and so much bigger than anyone was really anticipating. There was confusion about how they were calculated, confusion about why we were putting such large tariffs on some very small countries. There's a lot of unknowns as to what had just happened, why it had happened, and the market responded very poorly. The next day, the market was down. The tariff news swept the whole market. Everything was down. U.S. markets were down. International markets were down. The day following, it was down again. It ended up being one of the worst two-day declines in the market in history. Monday, there was volatility again. Volatility all over the place. There was a fake news headline that there was going to be a delay on the tariffs, and that gave us a hint as to what could happen because the market skyrocketed for about 10 minutes, and then there was some clarity on what had happened, and then back down it went, followed by 2 more days of the market going down, bond yields going up. That was a big thing. People are attributing a lot of the softening stance on tariffs to the bond market. Come into Wednesday, so 1 week after the tariffs went on, bond yields were going up, stocks were going down, and around 1:30, Trump posted that he was delaying all tariffs with the exception of China, and the market just blew up. I came back on my lunch break and saw that the market was roughly down a bit, and about 10 minutes later, it was up about 8%. So once that tweet went out, it changed the entire landscape of the market for the day. And we ended up with one of the highest single-day gains in history, and I believe it was the highest volume of trades in a single day in history. So it just was insanity.
This is as volatile as I think I've seen it in my almost 20 years. Most of the time, you're not looking at it on an hour by hour. And as Joey said, that the day we got the almost 10% run up, you stuck your head in my office and said, what just happened? What's going on here? And I mean, we almost had everybody up here kind of watching the TV, and that never really happens on a hour by hour basis for us around here. We're always kind of thinking a month out or a year out or 5 years out. I think that's what's got clients the most spooked at this point is just the pure volatility on it on a day-to-day or hour-by-hour basis.
Yeah, I think you'd had the Masters on, And I was like, you should change channels quick. Something's going on.
That's exactly right.
Talk about days that you don't forget. You mentioned it's not usually we're watching it hour by hour, but that's the beauty of our team, to have dedicated team members to client portfolios where we can and we do deploy an hour by hour basis of making sure that we're staying in the right lane, we're staying focused, and we're making moves proactively for our clients. So that first week, thanks for giving us a recap day by day. For the rest of April, we're recording with a couple days left before the month officially closes. Tell me a little bit about the last part of April. What did we see transpire?
Really, since the 9th, the week after the tariffs went on, the market has been flat. Mostly the last 3 days have been up, but the broad indices are flat in the 2-ish weeks following that first week. Basically, we're not back where we started because there's the flat 10% tariff on the reciprocal countries. There's the outlandish 125-ish, I think it's around 125 on China tariff. That's just unsustainable. So we're not where we started, but there is, again, this sort of, all right, we're going to wait and see because there's negotiations going on. There's this happening in the background. There's that happening in the background. We don't know where it's going to land, which is it's a frustrating reality. To a month ago, if you remember, we were like, well, let's see if anything legitimately happens in the next month. And it was a crazy week. And now we're saying, well, we'll see if anything legitimately happens next month. And it's hard to find a place to land. And I think that's been the theme of April since that first week.
Yeah, and I think you have two different pieces to what's going on. You have policy and politics. I mean, I've been kind of talking about this for a month now, is that you have the policy and the politics, and then you have the economy and what's going on with that, and that kind of converges into what's happening in the markets. Yeah. And so policy and politics is changing hourly based on what's coming out of Washington. But from an economic standpoint, we've known that unemployment's still pretty good, but it's starting to sneak up a little bit. GDP's coming down potentially, and how much farther down it comes depends on maybe policy a little bit. So the economy is softening slightly, not to a concerning level where we say, hey, something's going to happen now and it's going to happen fast. But I think you kind of have those two pieces are converging into one, and then now you have the markets trying to figure out, all right, how do we reconcile what's happening from each side as we're kind of making our decisions on where to invest. And so I think that's what makes this particular time period a little bit more unique than some others.
Joey, what are some economic markers that are coming up in the next month that we're keeping our eyes on? Things that they're talk of impact and how it'll impact markets. What are some key moments in the next month that we have on the outlook?
The biggest, I would say, are probably unemployment, interest rates, and inflation. Unemployment and inflation are going to be the two that I think signal the most the direction of the economy. There's going to be a lot that can show up in the actual GDP data as it comes out. But if unemployment stays healthy, if inflation doesn't run up, I think that helps curb a lot of fear about what could be the result of the current political climate and how it can affect the economic. So those, I think, are big ones we're watching. Obviously, as GDP data comes out with consumption, government spending, all of this, we're going to be tracking that. I think if consumption is slowing, that's a big flag of something we want to be aware of.
Do you think the market's not paying as much of attention to the Federal Reserve as they were a year ago? It felt like a year ago when we were talking about interest rates, the market completely moved seemingly based on what the Federal Reserve was going to do with interest rates. And it's like now it's almost maybe not an afterthought necessarily, but it sure doesn't seem to be the driver. Now, if he pulls Powell from the Federal Reserve, that does definitely seem to be driving things. I think that's a non-starter, but it feels like that's not as much of a big deal, which is just another strange piece to the market too, right?
Yeah, there's so much that goes not missed, but it isn't given the weight of significance that it traditionally is because of all else that's going on. There's been a few different times that I've read some commentary or looked at some headlines where people are saying, if this was in a different environment, this would be the biggest news of the week. Mm-hmm. But it's over within a few hours because there's just too much else going on. Mm-hmm. And so there is a lot that I think it's not swept under the rug. It's just kind of, okay, that can't be our attention span priority right now because there's a lot of other things happening.
We talked previously about emotional strings and behavioral investing previously on March's segment. It's interesting to see how metrics may be better. So we've got a better outlook for interest rates coming down potentially later in June, but the consumer sentiment scores coming in as of Wednesday dropped about 10 points from the month before. So consumer sentiment is at almost an all-time low. And we've got somewhat healthy economic metrics, not necessarily the worst we've ever seen, but that consumer sentiment is trending downward. So Nate, as far as the market historically, have we seen this before? Is it the worst people have ever been? Talk to me a little bit about the emotional response from clients and activity in the market.
Well, I think if you look at the chart on consumer sentiment, it was almost this low not that long ago. Then it ran back up, and now we're kind of back down here again. So the interesting thing about consumer sentiment is it's literally not an economic looking or rear looking economic number to say how many housing starts were there or what was the unemployment last month, right? This is saying to real people, how do you feel about where you are in the markets? And that has probably more to do with spending and habits like that than anything else, which, like we've always said, right, Joey, is one of the things we look at in the portfolios is earnings. At the end of the day, you can talk about all of this policy, all of these economics. At the end of the day, you're still investing in companies. That's the pure, simple piece of what we do. We invest in companies. And if companies are still making money, either revenue's going up and spending's going up, or expenses are going down, it's not a super complicated equation. If those things are happening, then you're going to make more money owning these companies. And so at the end of the day, sometimes you got to take out a lot of this noise that comes around on a day-to-day or hour-by-hour basis and say, what's the earnings? How's the company going to do, and why are we invested in this particular company or this particular sector? And that's kind of what ultimately moves the market over longer time periods, and that's how we ultimately are invested.
Mm-hmm. And Joey, as far as how people should respond when situations like this are happening, what are things that they can do to ground themselves from making drastic decisions or emotional responses when the market moves?
If you can find ways to turn off some of your headlines, that would help a lot. Maybe try and limit yourself to how many times a day you're checking the stock market. The day-to-day, the hour-by-hour updates are not healthy if you're trying to figure out what to do for making financial decisions. You just get whipped back and forth. There's so much turmoil and anxiety that can come from the headline you read now versus the headline you read in 1 hour, the opinion of this person versus the opinion of that person. So I think if you can find ways to have the discipline to disconnect, call your advisor and say, give me a 5-minute rundown, and then I'm not going to look at this for 3 days, and then I'll call you again, give me another 5-minute rundown. If you can disconnect from the churn of information, I think that helps weather the ups and downs a lot and can help you from overreacting.
This is certainly not something that you've not seen before, maybe not the exact picture. Nate, do you want to expand on that and give a little bit more about what you could tell clients?
Well, I think oftentimes clients want an answer of what's happening right now and why, and oftentimes giving an explanation of what's your financial plan. Let's say, okay, one piece of your financial plan are the investments, and yes, that's important, and we want to make sure we're managing those as best as we can. But ultimately speaking, especially in times like this, we're often not going to have a real good answer on what's going on in the markets. Basically, when you look at the numbers, it's on a day-to-day basis, it's a coin flip if the market's going to be up or down. So on the short term, it doesn't really matter. And so when I sit and talk with clients, it's going back to what's the financial plan? How are we saving? How are we spending? What buckets do we have your assets in? What phase of life are you in? Are you taking income from the portfolios, or are you just saving? So I think we've had just as many clients reach out to us and say, hey, is now a good time to buy? I've been sitting on cash for a while. Can we buy? And yes, for certain clients, this is a great time. You see a market dip like this, let's get in if you're a long-term investor. Mm-hmm. And if you're not, you shouldn't have at least a portion of this in the markets anyways. And so a lot of times I think it comes down to the financial plan as much as answers to what technically is going on in markets on any short period of time.
Mm-hmm.
Yeah.
In my house, when you have two little kids and there's a lot going on, that we can control what we can control. And so bringing clients back to the space of, okay, what's one thing that would make you feel more in control right now, and how can we take a baby step there? Or what do we have that's in your control when things are out of control and moving in the market?
And as somebody who doesn't necessarily like to be the passenger in the car, I'm pretty much always the one who likes to be driving. I do understand the anxiety, right? This is, if you look at it from a client standpoint and they're trusting us to do this, oftentimes the phone calls are not distrust. It's just, hey, explain to me what's going on and what your process is and how your team, how LVZ is handling it. And then it makes the ride a little bit easier. It makes sense on why when things get a little sideways like this, that people kind of just want a little reassurance or an answer.
Mm-hmm. I think with someone who's not an enthusiast for roller coasters like myself, the only way you will ever get me on one is if I can see what the whole route is that I'm going to take, so that I can see what every drop and dip or upside down turn is. Does seem to ease my concern. So by taking a look at, here's the pieces we can control, and that's the majority of what we've built your plan around for the season of life that you're in, just having the lens of, here's what we can control, and this piece is out of our control, but what is in our control is built for what you need right now and in the near future. So I think that's always reassuring to help people when they're feeling anxious.
Right now in this moment, we're waiting to see on a lot of decisions that are being made, and that can be, as you're saying, it can be hard to sit with that when you don't have control and you wish you could just skip to the next 6 months when the decisions have been made and not have to go through the process of the decisions being made. But we can only get there by sitting through it and holding tight and making sure we're communicating with clients throughout it.
And this is all part of the process, right? I mean, This is the volatility you get in markets is why you get, return over a fixed CD or over a savings account. You have to go through some of this volatility, and it's not abnormal. None of this is stuff we haven't seen before. The exact scenario might be different, but history rhymes. Right? It's having down markets or pullbacks in the markets is not at all uncommon. So this is part of what we have to put up with to get returns.
Yep.
Clients that have been in the market for a while, what are some things that they could step back and assess in order to understand, have we seen this before? Has it been this bad before? What is your advice to clients taking a look back on where the markets have been?
Well, to the first part of that, I think as we've looked at client accounts, especially those clients who are in more of a balanced allocation where they do have some bonds and fixed income in the allocation, and they're diversified much like we do with the portfolios that we run, right? You saw small caps, large cap growth so far this year not have a great year. They've been down, but you've seen international for the most part and bonds for the most part have a positive year thus far. And then there's certain sectors that are somewhere kind of in the middle. So when you have diversification like that, yes, you're going to have pieces of your portfolio that are down, but you also have other pieces that are up. And I heard somebody say quite a while ago, if you don't have a dog in your portfolio, you're not diversified right. In other words, even in the best market, you're probably going to have a position in your portfolio that's not doing well, that you look at and you go, well, that's not performing that great. And that's part of having diversification, so that when the next market cycle comes, that one's going to perform better. And you're going to have ones that historically have performed well that don't perform as well at a certain time. So I think that's part of what's going on this year. Honestly, the last 2 years, 2022 was a hard year. We saw bonds and equities down a lot. And then 23, 24 was really pretty good. And so now you're into 25, and that was part of the allocation changes we've been making to our portfolios over the last 9 months is kind of saying, all right, what's next in the market cycle? Because you did see certain things that seem to be overvalued. So like I said earlier, some of this is driven by policy and politics, but some of it's just driven by, market cycles.
So Nate, as our guest today, do you have any words of wisdom to leave with clients as we head into the month of May, knowing that we've ridden the biggest coaster so far that the market's built?
I know it's not the advice any client really wants, or they often get sick of us saying it, but it's like, just think long term, right? Don't get caught up in these. We talked at the very beginning about almost watching the markets hour by hour, and we can do that here, right? Because that's what we do all day, every day. But to Joey's point earlier, and he's been pretty steady on this point for the last few months, is like, just don't pay too close of attention to it. Obviously you want to know what's going on, and that's valid. But if you're thinking on this on a night by night basis of where's my portfolio, what happened today, that's a lot of stress for a client. That's what we're supposed to be taking off your plate.
Mm-hmm. Joey, any wisdom as we head into the month of May?
Hoping that the roller coaster smooths out and that it's not worse next month and more volatile. As far as advice, ask questions, try and learn. If there's stuff you don't know about, try and find a trusted source that can give you that information. We'd love to be that source. If you've got a question, reach out to me and I can provide some economic insight, but make sure the information you're absorbing is information that brings clarity, not information that brings more confusion. There's a lot of headlines and responses that people are going to give that are going to elicit a response of panic and stress. Try and find information that still answers your questions but can bring peace and comfort.
That's great advice. I think the whole education piece I second that advice wholeheartedly. That's smart.
That's one thing that when we talk about leveraging expertise, I'm a big who, not how person. And if it's not your expertise to build infrastructure to support a market roller coaster, make sure you're finding someone who really knows what they're doing to prop it up. So thanks for your time today, gentlemen, and I look forward to seeing what the month of May has in store for us. We talked about a couple of things today that if you want to learn more and have that education to go a little bit deeper on what we're discussing as far as terms or a consumer sentiment score, you can find all of that information in the show notes and in our disclosures.
That concludes this month's LVZ Market Minutes. Quick, clear, and curated to keep you informed and empowered. If you found these insights valuable, be certain to tune in each month for a strategic update. Until then, stay informed, stay invested, and have peace of mind that our team is actively monitoring the markets and managing your portfolios.